It's always supply, it's always demand, it's always some mix of both. So Kyle, as we talk about some of these movements here, what is it on your mind that you think is going to be driving markets going forward? Is it the geopolitical supply side of things, or is it the tariff effect, global market slowdown demand side of things?
Absolutely, all those things combined. And what I say kind of start sarcastically, but somewhat in real impact is I'm worried about supply, I'm worried about demand. What I really am concerned about is the difference between the two, and that shows up in storage, because that really reflects the difference between those supply and demand factors. Yes, as Jackie mentioned, yesterday the API reported a very large 9.75 million barrel increase in crude stocks here in the U.S. Last week, the EIA reported an over 8 million barrel. And so those stocks have begun to rebound after a continued slide beginning in 16 and 17. Those inventories have begun to rebound. It does appear that Saudi Arabia and Russia are possibly making do on their promise to bring more barrels to the market. And those are reflected in both U.S. and worldwide inventories.
Jackie also brought up a very interesting point about the correlations or the trading relationships, the statistical ones that exist between certain assets. Oil and the markets have been fairly closely correlated for the better part of months, if not maybe a year or so now. Is that something that you are paying attention to, and is that correlation or trading relationship going to stay intact going forward?
Absolutely. I think crude is more and more an asset class. There's lots of dollars in algorithmic systems and trading systems that do follow other assets and do cross correlations. While there's always been a lot of debate that higher energy prices should be detrimental to equities, they really over the last couple of years have become and are a very, very strong directional correlation on a daily basis. About 2/3 of the time, equities and the S&P 500 end up moving in the same direction.
We also want to kind of at least talk about the idea that a major storm in the Gulf of Mexico has just now blown through, one of the biggest storms in some say over a century, hitting that Florida Panhandle region. It had largely spared many of the oil and gas rigs in the Gulf of Mexico. Will there be an effect from this storm on the oil market overall, or is this going to be somewhat fleeting?
Very little. Thus far, the BSEE, which is the Bureau of Safety and Environmental Enforcement, had oil production curtailed of less than 2 million barrels, a natural gas of less than 2 BCF. After the devastation of Ivan in 2004, Katrina and Rita in 2005, what's left of the energy infrastructure is very stout. Certainly a direct hit on any of those platforms would probably take it out for an extended period, but for the most part, these companies are able to get their people off the rigs, safely shut down the operations, and then return them pretty quickly. I suspect that as early as this afternoon, there'll be crews returning to those platforms, bringing the production back online.
What is the most important thing for you to be watching in the energy markets in the coming days and months?
Clearly, the next tweet is a possibility because of the fact of the impact that it could have, both realistically and then also psychologically on the market. Those Iranian barrels it's already well known that those are coming off. It does look like that the market is prepared for that, and thus the pullback that we've seen. I look very closely, even though it's a lagging indicator, I look very closely at those inventories and inventory trends. How are they changing? What's the direction of those change? And does that change appear to still be intact and sustainable?